let me have begun the recording of the second video. So let me just invite everyone who has joined afresh, who I had not, who I had not said hi to. So Edward Mburu, welcome. Glory Mburu, welcome. Mary Murioki, welcome. I'll try and fix the audio. Then we have Winfred, welcome, and the rest. Fids is joining us from South Africa. We have Ignatius, who is joining us from Kenya, from Ghana, and then I believe Angela, Edward Mburu, Glory Mburu, Julius Kitonyi, Kate, Mary, Wanjiko and Winfred and myself, we are joining in from Kenya. So I'm really excited to have you guys. So this is the second session of the second day. I decided to break it into two so that we can also download the videos easily and even watch them in bits so that we will have better understanding. So we will be looking at something called Smart Money Plays. Mary Morioki is in Saudi Arabia. Karibu sana. Say hi to the prince for us of Saudi Arabia. So thank you so much. So I will take us to the second part. So the second part is, allow me to get done with this. You can see the content in the previous video. I will upload it tomorrow. So for the ones who have joined a bit later, kindly subscribe to our YouTube channel. And I just have 2 subscribers, and this is not this is a joke. But yeah, we have videos on how to open an account with brokers. We have videos, yesterday's videos on how introduction to forex and introduction to market structure, forex basics. So I'll continue dropping content over there, so kindly subscribe, share with friends if this is really valuable. So allow me to go to the second bit. This will take us probably 40 minutes or less, and we should be done. Just give me a minute to ensure that the data will take us all the way. Just to have backup in case the Wi-Fi decides to do what it does. Kindly let's mute if we are not participating in the call or addressing the point in the call, to avoid a lot of back and forth. So the second part is smart money plays. So these are the things that now happen at these areas. Now knowing what to look for when we want to buy, and so forth. So the first one that we look at is the first one that we look at is, let's give it time, is it's called the imbalance. We have the imbalance. Then secondly, we have the smart money cube. They actually have a cube, these guys that we are following. And the third one is the mitigation block. So we have others. I'll just highlight them, but I won't post them. We have the king order block. And then we have another one called the Judas swing. Judas swing. We all know about Judas and what he did to Jesus. So yeah. But I will not, I will not focus on these two. Okay. But we can I just use the first three. So for this purpose we'll just look at these three. So what's just simple terms, what do you understand by imbalance? You can drop it in the chat, you can unmute and comment. What do you understand by the term imbalance? Don't think forex, just think imbalance. What do you understand by the word imbalance? Anyone? I don't want to mention names. Just a simple definition of imbalance. If I say that Kenya is in a state of imbalance, what do I mean? Not balanced, not uniform. Amazing, amazing. Anyone else? Yes, I will. It's in the group. The YouTube link is in the Telegram group, but I'll also share the link here right now. So let me just copy it for those on call and who are not probably in the group, in our Telegram group. What else do we understand by the term imbalance? Not balance. Okay. Yes, yes, yes. Thanks for that. So, what imbalance means is when buyers are more than sellers in the market, or when sellers are more than buyers. I will go and show us in a chart example what this means. When we were starting the class, I was saying that buyers should be equal to sellers. So, for example, if we can, let me just get rid of this one for now, and everything else here that I had marked up, it's in our other video, so you can find it there. So where you find an upward push or a downward push, okay, without something like this, you see, here there was this, then there was a buy up. So you find that it's just an upward push or a downward push. That's what's imbalance. So the buyers in this instance, for example, here the buyers were stronger than the sellers. Here the sellers were stronger than the buyers. Here the buyers were stronger than the sellers. That's why the candles are a certain color. Then here the sellers are stronger than the buyers. So that's just what imbalance means. And something else that I mentioned yesterday, you can check our video yesterday. There's something we touched on at the end of the class. I know the guys in Kenya, there was no electricity. So most of us who are using Wi-Fi dropped from the call. But there's something we checked. It's called a Fibonacci tool. It helps us to know what the premium or the discount zone is. For example, I was saying when in Kenya, in our country right now, the onions are really expensive. And like 3 months ago, the onions were not so expensive. So if for some reason I dreamt or I was told by the Minister of Agriculture that onions will not be in the market, then I could have bought even land or hired a store and just stocked a lot of onions, okay? So that when price goes up, then I can sell them at a better price. So let's say I was buying one at $1, okay, a kg at $1. Then right now the kg is costing $2. So we normally buy at, let me just pull that tool for us. We normally buy and change the setting. No, the setting is okay. So below depending on the market now, okay, depending on the market, below 50 is discount. Anything that's below 50 we look for buys, then anything above 50 we look for sales, okay? For example, you can sell from anywhere above this. I'll explain. And we can buy. We look for buys for anything below this. So you don't just see, even these smart money plays, they have rules that govern them. We don't just see an imbalance somewhere here and we want to buy, because it's at a premium zone. When something, it's, let's say when you have um, a designer perfume that has been launched, so you can be given a discount. Let's say you go to the supermarket, you can be given a discount, so that if it was selling for, let's say, $50, you can buy it for $35. So you will have made profit when you buy it at a discount. You will have saved the 15. But now we look for sales in the premium zone, anything above 50. So the first thing is, imbalance is where there is overbuying or overselling. But now this imbalance and all these smart money plays, we don't just spot them anywhere and then we buy or sell. We look at that, given from how we began, the structure is selling, it is bearish, okay? Or the structure is buying, the structure is bullish, okay? Now, when the structure is selling, for example here, the structure was selling, we will be looking for, so this will be, let me just mark that again, this will be our range again. We'll have to watch these videos a number of times before these concepts are able to sink for those of us who are new to Forex. So the structure here was selling, okay? So we will be looking for sales from this point, which is now, above 50. We're looking for sales. So you can write this. Let me type it with you so that you say I'm not giving you tasks and I'm a bad teacher. So always sell at premium zones. Look for buys at discount zones. Okay, guys, that's a that's a life saver. Okay, always look for buys, bold, italics, what else? Color red, danger. Huh? Always look for buys at discount zones and look for sales at premium zones, because if you do that, you increase your likelihood of anyway. So let's go back to imbalance. So imbalance is areas where there has been overbuying or overselling. So for example, let me change this and put them to the right for us to be able to see what is happening. Okay, so okay, allow me to show us. So this was also another range. Okay, so it was, because it was now, price will be, how to know range is by, where is that, how to know the range, it's by marking out. So price gave us a higher low, a lower high, a lower low, a lower high, a lower low, then price broke structure. So when price came to create this new higher high, so our range will be from here to here. So allow me to get rid of this, delete, okay, just to show us now, to show us what happened here for price to go up. Okay, so as you can see, in this range of ours, let me just expand this for us to see. In this range of ours, first thing, everything played out. Okay, liquidity was captured by this candle, then structure broke at this point, then now price has come back to mitigate. Okay, then at this point there is overbuying, so there's an imbalance over here, and this imbalance is below 50%. So those are the few things that we ensure that we take into place to see before we take a trade. Okay, before we take a trade. So yeah, those are the things for the imbalance. That's the imbalance, and for every other smart money play, the ones that we have here, the ones that we have here, the same things we look for them. It has all these things have to happen. The ones that we discussed in the previous video, and then okay, we're recording, and then we also need to ensure that that the Fibonacci is it's below if you're looking for buys, and it's above, it's premium. So anything above 50 is premium. Let me just add that. Yeah. Premium is above 50, 50 to 50% to 100. Okay. Using the Fibonacci tools above 50%, and this one is below 50%. Okay. For us to know. So the first one is imbalance. We can also look for an imbalance in a downward market. Let me look for one. For one here, and try and see. So the same thing. Structure is king. I had structure is king. Liquidity is queen. Yeah. So we have that. Let me just mark these big ones. I'll just mark these two. Okay. But there is a lot of things that's happening here. So this is our top range again, and then this is our down range. Okay, stop it. Then this is our down range. All right. Then there's a lot of things that I'm seeing. I'm being distracted. For example, okay, I'll just confuse us. But yeah, so price was going down. Okay. So there was, let me just mark this out. There was this down push. So when price was coming back, here this is also an area where we have excess sellers. You see, all this region. You see, so we will be looking for sell opportunities from here. But remember our Fibonacci tools. We need to sell. No, I've used it wrongly. We need to sell from anything that's above a premium zone. So this one was a valid one, but also so there is limitless opportunities if we are patient. Then with proper risk management, yesterday I shared also on our video that we use a risk to reward ratio of 1:3. So any trade that gives us a 1:3, then it's a profitable trade. We should not enter a trade and get out before our 1:3 ratio is. I can share that in another video, but I'll also share here. Okay. So what happened? There was liquidity that was captured. I've just seen another buy, and I just decided to. There was liquidity over here, so this was captured by this candle. Okay. Then price gave us an upward push, then came down. Okay. To this place. This one came actually down to this place. Then it gave us. So assuming my entry was, where is that tool? There's another tool. I know I'm mentioning a lot of tools, but there's another tool that we used to. So just know, I'll try and make this simple. Long position and short position. This is the one that we use to check for our risk to reward. So for short, S for S. So short is selling, long is buying. Okay. So in our case, we are buying. So if our stop loss would have been here and our entry would have been there, then up to here, we will have gotten a risk to reward ratio of 5 to 1. So this will have been a profitable trade, regardless of what happened later, because now this liquidity was captured before the market moved up later. So we can use this tool to know the amount of money we are risking and all that. Because the first thing is not looking at what we'll get, is knowing, okay, this trade I am risking $5, or in this trade, after now checking all these things, it's not just waking up and taking trades. After you have established that liquidity was captured, structure was broken, and all those things. So any trade that gives you 1:3, it's a successful trade. Then I can also share, there's a way you can close. Let's say in the first video I showed how lot size work. Let's say now you opened with a lot size that is not minimum. You remember we said that the minimum lot size is 0.01. Let me try and draw this. 0.0, okay, 1. So assuming we opened with a lot size of 3 times this one, 0.03, okay? Haha, no. 0.3, okay? So when price gives you a 1:3, for example, you can reduce the amount of lots you can close. It's called closing partials. You can close, let's say you took a trade and you risked what did you risk? You risked, let's use the minimum, $1, okay, in that trade. So if you risked $1 in that trade and you get $3, you can close, let's say 0.2 of the lots, meaning you will have $2 in your account. Then you will let the $1 that's remaining to run, so that in case price come back this way, for example, the way it came back, you will still have, made profit. So closing partials help us to take profits from the table. So that's something else that I think I had not planned to share, but anyway. So let him who has ears listen. Yeah. So that's the first one, that's imbalance. The second one is smart money. Anyone who knows what the smart money cube is? Anyone? Anyone? Are we still on the call? Anyone who knows what smart money cube is? Okay. Bye, Angie. Anyone? Hi. Okay, I had somebody say that it's a smart that is smart. It's a cube that is smart. Someone else said it's a cube that has all the good surprises in it, but that's not the case. So a smart money cube is uh-huh.
Price action.
Okay, uh-huh. Anyone else? Anyone else? This is Euro USD. Anyone else? Anyone else? Okay, let me just go straight. I hope you can see my screen. So, what a smart money cube is, or other names that we can use for imbalance before I forget, is the IPA, inefficient price action. You can note that down, or failed value gap. Okay, it's like synonyms. Okay, all right. So you can just put imbalance stroke IPA, which is inefficient price action, stroke FVG, failed value gap. Okay. So going to smart money cube now. So a smart money cube is a weird cube in, anyway. It's the odd one out. For example, in when the market is buying, when we have a lot of buyers, then we have one seller. So a synonym of smart money is FTR, which is failed to return candle, okay? Or a banker's cube, or yeah. So that means, let me just go to the chart and show us. So here, you see this cube. See this cube. What happens is, let me go back to our forex. Let's say JP Morgan was buying, okay? JP Morgan was buying with big lots, okay? Then another smart money wanted to return price downwards. So they opened an order that was smaller in lot. So the reason why it's called failed to return, this is where this smart money plays is where smart money hides, and that's where price is likely to react from, okay? So you'll find that now, which bank? Citibank. This one, Citibank. It's a bank in US. They opened, let's say this one, JP Morgan opened this order here, okay? And they were taking price up with a 1 million lot size. Then Citibank opened a sell order with a 500,000 lot size, okay? But now the momentum was not strong enough to push price down. So that's why it's called a failed value gap. So that's just smart money cube. It's when you have buyers, then a seller appears, or you have sellers, then buyers appear. Let me show us another one that actually played out. I'm looking for one that played out. Okay, for example, this one here, uh, the market was downtrend, okay? Then there was these people. So they were trying to return price up, okay? But now they fail. So you'll find that when at times, this does not always happen, but at times, when price comes to this area, let me show us. When price comes to that area, there will be a rejection. So for example, here, price rejected from here, okay, because of this smart money cube. And just to take us back a little bit on mitigation, there are rules that we use to play. So for imbalance, we either look for to feel for the 50% or the fill of the imbalance. Let me show us what I mean by that. I think this asset is a bit more cooperative. So you remember this one came to mitigate this order, okay? So this imbalance, we want to play this imbalance, okay? So price came to the 50%. It's even more than the 50%. So if you play the 50%, you can put your order here, anticipating for price to go up, or you can put your order here, depending on how you feel. Then your stop loss should always be outside the range. That is for that. So looking for a smart money, let me use another asset. There's an asset that really got me burnt when I was starting trading. uh, it's called the VIX. It's really volatile. It's one of the most volatile. Um, hmm. uh, Let me look for something, an entry of some kind. Just seeing. It does not always hold. It's a bit risky because it's also used by institutions for inducements. So, for example, this did not play out, but it's just to show us there was this downward sell and then there was this trying. They were trying to buy price back up. Okay, they were trying to do this to have price push it to the upward. So they were looking to push price up. Okay, but it didn't work. That's why it's called a failed to return. They were trying to return price up. So that's the second one that we can look at. I want to look for one that actually played out, but different assets focus on different things. Okay, for example, here, I don't know, let me just highlight this for us. This one, you see, this one. So price came and then it reacted from this smart money cube and went all the way down. So that can be another example of. We will look at them in detail tomorrow. Now going to lower time frame entries. Then the last one, so that I give us some 15 minutes to ask questions. What was the other thing called? uh, the third one is the mitigation block. So what the mitigation block is, um, I lost the video. I didn't save the picture that we drew. You remember the picture that we drew? This is derive. Okay, but I believe we can use. So a mitigation block is the block that captured liquidity. Okay, so in this case, this one, um, the from here, you see from here, here is where they sold down. It's not from this candle, it's from this one. So they sold down. So mitigation block is the candle or the move that swept liquidity. So in our case, you'll find that this whole move was what swept this liquidity. We remember guys, okay? It's what swept this money that was sitting here. This from here, this sell. So that's also another key area of focus that smart money tries to react from, or you find them reacting from that point. So, and if in our example, let me get rid of this and show us something. We have two, okay, at the same place. We have two. We have the imbalance. You remember? We have the imbalance. Okay, this is the imbalance, and also we have this one. So if you find that you have two smart money plays at the same um, area, then it's double confirmation. So I will, with that said, I will leave it at that. Tomorrow will be more of lower time frame entries. Now looking for entries at even, you can actually enter at a minute, and even some brokers allow for seconds. Um, so this is like minute entry, lower minute. There's 1 minute. So we have already established that the trend is buying, and price is coming back to mitigate so that it continues to buy. So now we are looking for areas of entry at lower time frames. Okay. I think this has a lower one. I'm not sure, but let us just check. It actually has seconds. You can actually enter from even a 10 seconds. It's risky, but yeah, with time we will get there. So for tomorrow, we'll now look at, I know we've been focusing on daily, 4 hours, 8 hours, but from tomorrow we'll focus on now entries and now how everything comes together and how it's playing out in the chart. I'll share a few charts that I marked out from all the way from January until now, and the ones that played out and gave some profit. So cheers and God bless. Any comment, anything from the team?
I've got a question, please.
Okay,
Thank you for explaining everything.
okay,
But I just want to know. Yes, you've explained if you wanna if we're looking for sales, then sell at the top and then buy at the bottom.
mhm,
How do you determine those zones? You know about the premium zone and the discount zone. How do I actually go when I look at the charts and mark those discount zone and those premium zones?
okay. Let me just do this. Get rid of everything here, and we'll just use the one we've been using. Okay. Um, I actually took this buy from here. I took it on 2 minutes, I believe, and brought it all the way up. But let me just let me show us something. So the first thing, we have to bring everything together, okay? So I hope I'll be able to answer this. If I'm not, somebody else can also assist. So structure was buying, then all of a sudden we started to see this, okay? So this is a high, a low, lower high, price gave us a lower low, then price gave us a lower high, then give us a lower low, then price gave us a higher, a lower high, then a lower low, then a lower high, then a lower low. Then price went ahead and broke structure, okay? So all this while, you're not doing anything. You can check this at 4 hours. You don't have to look at 24 hours, but the higher the time frame, the stronger. If you take a buy from now, for example, this analysis that I took from here with this one, and I bought all, it's more likely. Like the higher the time frame, the stronger. If you look for it from weekly or monthly, and now you go and have an entry on a 5 minutes or 15 minutes, then you can ride that trend for months. Okay? So for example, price was buying from the 5th of August all the way. It started going down on 19th of August. That's 12 days. If you're in that trade for 12 days, you will just be in blues and making money. So when all this is happening, we are not in the trade. Okay. Um, that's probably the first thing. Then now we wait for price. When price begins to come down, now we mark out the range. We mark out the range. We mark out the range. It's just patience. It's just patience. Okay. And the range again. Okay. And then there was liquidity that was captured. We remember there's this liquidity that was captured. So all these things, you are not taking any trade yet. We're just waiting. Then the third thing is, here we are seeing there was overbuying. So there is this imbalance over here. There is this imbalance over here. There is this imbalance over there. And then there is also the move that now gave us this move. Okay? Is it from there? No, it's from there. This is where they sold for them to capture all this liquidity. Okay, so that's the third thing. You have not taken any trade yet. It's just patient, and I know it's something we need to develop. Then, but over time, I also struggled with the same when I was starting out. You want to take every trade that you see, but it's better that you don't take the trade and your money is still there. And just some advice. When you're learning, don't use trading as your only. You'll have the pressure. You have rent that is due, you need to pay and all that. So you can take risks that you will not have taken otherwise. So you can look for something to do. You can sell. You can work an 8 to 5 job as you're building your skill and all that. So so after all this has happened, now this is where now you bring now the Fibonacci. It's not just once, it's all these things have to happen so that now you can know it's below 50. So now from tomorrow I will show us things that we will be looking at when price is at now this point. Okay, I don't know if that answers your question. Hello, can anyone hear me? Okay, any other question? Oh, I was supposed to share this link. I actually forgot. For those who are not on the call, let me just put this here, and then yeah. So that's the YouTube link to my YouTube channel, or our YouTube channel is Issachar Fortuners. But yeah. So if there's no other question, I will leave it at that. We are done 5 minutes to time, so the timing is good. Cheers and God bless. I will post both recordings in our YouTube channel.